Hi there, this is Simon, personal finance coach. Tax filing deadline is rapidly approaching, and if you have already filed your taxes, you may have noticed that taxes are the biggest expense impacting your take-home income. The good news is that there is a number of legal ways to reduce taxes. In this video, we will review 5 standard and 5 advanced tax strategies for high-income earners. Deploying these strategies can significantly cut your tax bill by tens or even hundreds of thousands of dollars to keep more of your earned money. In the interim, please subscribe to this channel to receive notifications on future videos. These 5 standard strategies should be the foundation of any tax savings plan, as they are essential for keeping more of your money. Number 1 strategy is to maximize retirement contributions. Retirement accounts offer some of the most straightforward tax advantages. Advantage number 1 is 401k and equivalent plans that allow you to contribute pre-tax up to $23,500 or $31,000 if you're over 50 per individual in 2025, reducing taxable income. Advantage number 2 is IRA plans, traditional and Roth, that allow you to contribute up to $7,000 or $8,000 if you're over 50 per individual if you meet the modified adjusted gross income criteria. Advantage number 3 is backdoor Roth IRA that allows high earners to still contribute to a Roth account despite income limits. Number 2 strategy is to use health savings accounts known as HSAs. If you have a high deductible health plan, HSA has a triple tax advantage. Advantage number 1 is contributions are tax deductible. Advantage number 2 is growth is tax-free. And advantage number 3 is withdrawals for qualified medical expenses are tax-free. In 2025, individuals can contribute up to $4,300 and families up to $8,550 every year. If you don't use the funds, you can invest and grow them tax-free, effectively turning it into a stealth retirement account. Number 3 strategy is tax loss harvesting. If you have capital gains from investing in equities, you can use tax loss harvesting to offset the capital gains by selling equities that are under loss. You're allowed to offset up to $3,000 in ordinary income per year, and if you incur more losses, you can carry forward these losses to future years. These losses never expire. This is a great way to manage taxable gains efficiently. Number 4 strategy is to invest in tax-efficient investments. Investment type number 1 is municipal bonds, interest that is tax-free at the federal level. Investment number 2 is ETFs over mutual funds. ETFs are more tax efficient due to the way they are structured. And investment number 3 is buy and hold index funds. Minimal turnover means fewer taxable gains. Investment type number 4 is to consider trading in retirement account if you trade often, since taxes are deferred to the time of a withdrawal. Number 5 strategy is charitable deductions. If you are giving money away, do it in a way that maximizes your tax benefits. Donation type number 1 is to use donor-advised funds to donate lump sum now, take the deduction immediately, and distribute the funds over time. Donation type number 2 is qualified charitable distributions. If you are 70 and a half or older, you can donate directly from an IRA to avoid income tax on required minimum distributions. Donation type number 3 is appreciated assets that allow you to donate stocks or property instead of cash to avoid capital gains. These are the 5 foundational strategies to minimize taxes. Now let's review 5 additional strategies, advanced, lesser known for tax saving purposes. These require more planning but can offer massive benefits. Number 6 strategy is investing in real estate. Real estate offers huge tax advantages that most traditional investments simply don't. Advantage number one is depreciation. Real estate investors can deduct property depreciation, often leading to tax-free cash flow. Advantage number two is real estate professional status. If you or your spouse qualify, you can deduct unlimited real estate losses against active income. Advantage number three is short-term rental loophole. If you rent a property for an average of less than 7 days per stay, you can deduct losses without qualifying as a real estate professional. Advantage number four is cash out refinances that allow you to refinance your property and pull out tax-free cash to reinvest. Advantage number five is 1031 exchange that enables you to defer capital gain taxes by rolling proceeds from a sold property into a new investment. Advantage number six, step-up basis, allows inherited property to step up basis and eliminating capital gains tax on past appreciation. Strategy number seven is investing in oil and gas. This is one of the few investments where you can earn income while still getting significant tax deductions. Oil and gas investments can provide huge break in taxes. Advantage number one is investment in intangible drilling costs that allow you to deduct up to 80% of the investment costs in the first year. Advantage number two is depletion allowances that allow you to offset taxable income from oil and gas production. Advantage number three is passive income benefits that allow you to earn income from oil and gas investments to be taxed at the lower rates than earned income. Strategy number eight is qualified opportunity zones. These are designed to encourage investments in underdeveloped areas, but they also create incredible tax benefits for investors. Investing in qualified opportunity zone offers major tax advantages. Advantage number one is deferring capital gain taxes until end of 2026 by reinvesting those gains. Advantage number two is eliminating capital gains tax on appreciation if held for more than 10 years. Strategy number nine is family limited partnerships, known as FLPs. This strategy is particularly useful for high net worth individuals who want to pass on wealth while reducing tax exposure. FLPs are an advanced estate planning tool that lets you benefit from three advantages. Advantage number one is to transfer wealth at a discount due to valuation discounts on minority interests. Advantage number two is to minimize estate taxes by gifting FLP shares over time. And advantage number three is to maintain control by distributing assets to heirs in a tax-efficient way. And strategy number 10 is paying your children to work in your business, if you have one. This strategy is a great way to lower your taxable income while teaching your kids financial literacy and work ethic and tax savings at the same time. Advantage number one is to shift income to lower tax bracket. Instead of paying taxes on your high income rate, your child can earn up to $15,000 tax-free in 2025. Advantage number two is to deduct their wages as a business expense, reducing your taxable income while keeping money in the family. Advantage number three is to avoid payroll taxes. If your business is a sole proprietorship or family partnership, wages paid to children under 18 are exempt from Social Security and Medicare taxes. And advantage number four is to fund a Roth IRA for tax-free growth. Your child can invest the earnings, setting them for long-term wealth accumulation. In summary, high-income earners have a list of strategies to lower taxes. The key is proactive tax planning. You can't wait until tax season to implement these strategies, but you can work with the tax professional to see which options fit your financial situation the best. Please subscribe to this channel to receive notifications on future videos, and thank you for watching.